Good morning, 5:19 a.m., April 13th, 2022, here in Jonesboro, Arkansas. Today I'm going to discuss the downfall of Vroom and Carvana. I'm not talking about the downfall where they're bankrupt and out of business yet. I'm talking about the stock price. Vroom is down to $2.08 a share. Look at Carvana, down to $100.78. Now here's a big problem. Look at this. 52-week high, 377 biggins for Carvana. 52-week high for Vroom, $48.80. Both of them have fallen tremendously hard. Vroom is down 95% off their high. While Carvana, wow, they're doing awesome. They're only down 63%. 63%. 50-day moving average 125, 200-day moving average 209. So Carvana is below the 50-day average and way below, more than half below the 200-day moving average. So if you think they can turn this company around, then it's definitely on sale. Look at this. 321 is the 50-day moving average. 1126 is the 200-day moving average. Man, if somebody bought this company, the average price of 200 days ago, bought 1,000 shares. They're down $9,000. Good Lord. Okay, let's look at some more stuff here. Look at their revenue. $3.1 billion for Vroom. But look at this, all negatives on the profit side. There's nothing there. Nothing. Balance sheet, they have $1.2 billion in cash and only $1.1 billion in debt. Which means theoretically they could use all their cash to pay off their debt, but then how would they buy cars? Right? Or pay employees and all that. But they have $1.2 billion in working capital. Carvana, check out their debt. This is unbelievable. 1.37 billion cash, 5.77 billion in debt, 2 billion working capital. Now I want to show you something. Let's go to Yahoo over here, because Yahoo lays it out a little bit different, and this stat is going to blow you away. You're not going to believe it. I found it hard to believe. Look at this. Debt to equity is 1,105. They have 1,100. Carvana has 1,100 times more debt than they have equity. How's that even happen? Let's look at Vroom. Look at their debt to equity. 124.55. That's more manageable. It's still more than I like to see, but for a $2 stock, that's excellent. Most $2 stocks, this will be 500, 1,000, 10,000, who knows how high. Very, very high. Look at all these negatives though. Profit margin, negative. Return on assets, negative. Return on equity, negative. But quarterly revenue growth, 130%. Carvana quarterly revenue growth, 105%. One of Carvana's problems is they're just so horribly run. Terribly run. They make horrible decisions. When the coronavirus first started in 2008, they canceled all car sales nationwide. They would still do trade-ins, but they would not purchase your car. And they must have figured out this excuse in about 45 seconds and put no thought into it. The official excuse was, it's unsafe for our employees to pick up your car when we're buying it. It's not unsafe for us to pick them up if we're trading it in, which makes no sense. The truth was, you may not remember when coronavirus first hit, the used car market plummeted. Cars suddenly were worth 15, 20, 25% less than they were the week before. Carvana had all these cars they were supposed to pick up and that they view they can way overpay for. I guarantee you now they wish they picked up every one of them and held on to them. But they canceled it. And I actually called them and I told the lady, I said, so it's safe if you pick my car on a trade-in, but not safe if you buy it. That makes no sense. But she would not budge. She stuck to the company line. That was a horrible decision. even without knowing what was going to happen in the future, we now do, that the stock market, the car market was going to bounce back up. They should have bought those cars because they said they would. And you have to be able to trust the company you're dealing with to do what they say they're going to do. You know, they're horribly run. You can Google this. Carvana is having tons of problems getting people titles. They're getting bad publicity left and right, story after story after story of people having their cars 5-6 months and cannot get it tagged, and it's sitting there because they can't legally drive it, but they're making payments on it. They're being investigated by state after state and city after city. States are threatening to pull their license. They escaped that in Florida for now. Florida almost pulled the license for the whole state. And they're going to keep their license in Florida, at least for now. Vroom, there's 2 stories I want to focus on. And listen right here. It's a terrible time to park your capital in Vroom stock. If you're, because it is very tempting for me to buy 100 shares of Vroom, maybe 200 shares. Just because if it goes up even to $3, I can make 50% of my money. But then when I thought about it, I thought, man, I could take that $200, $400, and actually buy something that's almost guaranteed over time to go up in value. I don't have to take the gamble. So I don't know that I'm going to. I don't think I am. Okay, now this one says, terrible time to park your capital in Vroom stock. They say that it's going to continue to lose value in their opinion. They're having difficulty turning revenue into bottom line profits. And it's a bad time for for any car dealer because people are starting to shy away from buying used cars. Okay, Vroom went public at $22 a share. And this was the summer of 2021, I think. Or maybe it's 2020. Not long ago. $22 a share, and it's been falling since. And, and look at this. Here is what this story really focuses on. Look at here. Despite annual revenue improvements, Vroom ended up losing the following figures rounded off. 2019, they lost $143 million. 2020, $203 million. And 2021, $370 million. As you can see, Vroom's net losses aren't just widening. They truly are falling off the cliff. Some would call it a money pit. And right here, it talks about it's a tough time to sell cars. One study in February calculated that a lightly used car costs 1.3% or $533 more than its new counterpart. That's mind-boggling, they say, when you really think about it. And in a similar vein, Ryan observed that a used car that is 1, 2, 3 years old is selling for 96% of the original sticker price for that car. Man, I saw a story today on the Chevy Spark EV Slurper page on Facebook where a guy was saying that he bought his car for, these numbers are not exact but close, because I'm going off of a 1 hour memory. He bought his car 3 years ago or so for $9,000. He sold it to Carvana for $91 or $9,200. He drove it for 3 years, over 30,000 miles, and he's making $100 on it, or $200. Those stories are all over the place. But anyway, that's the story where they're saying stay away from it at all costs. Now, this goomer that wrote this one, David Modell, okay, he says the deeply negative sentiment surrounding Vroom is overstated. So you got to make up your mind which one of these guys is right. Now, this guy says it is a risk, but it has some potential upside and some good things to point to. Like right here, there are undeniably negative data points you can consider, but don't ignore the bright spots. And of course, you should consider your risk tolerance. Speaking of that, I might as well throw in this stupid disclaimer. This is not investment advice. This is for entertainment purposes only. Do your own research. Don't sue me if you invest in one of these and lose your money. There you go. Here he is saying it's tough to find someone that's pro-Vroom stock right now. But there are 2 sides to every issue. And value hunters might look at VRM stock and see a rare buying opportunity instead of a toxic asset. So is it time for Vroom to zoom, or do more problems loom? Oh boy. Oh my goodness. Oh my. Is it time for Vroom to zoom, or do more problems loom? If you invest and it goes up, perhaps you can pay for the college education of the baby in your womb. Or maybe add on a living room. Okay, see if there's any gas left in the tank. Vroom went public at $22, and then it closed up 118% on the first day of trading. Yeah, it was the summer of 2020, like I said earlier. It started this year at $11 a share, then plunged to $3. Given those downgrades, you might be tempted to assume that Vroom's platform is basically an abandoned parking lot. Yet the data proves that isn't the case at all. 21,243 e-commerce vehicles were sold through Vroom during 2021's fourth quarter. That's a lot of cars to sell in one quarter. 93% year-over-year growth. And 170% year-over-year growth. You know, one reason I invested in Carvana a few years ago is because quarter after quarter after quarter, they kept having triple-digit growth. And I bought Carvana stock at $18. I bought more at $30-something. And then I sold it all at 70 some odd. The bottom line is I made about $2,500. Now, when it went to 300, I was kicking myself. And even now, with it down so much, if I sold it today instead of when I did, I would still made more money than I did then. But I own 0 shares now, and I have no interest in owning another share of it. I'm not investing in Carvana for sure. Investing in Vroom is not risk-free. But this author says it appears that Vroom is successfully leveraging its car buying platform to increase the company's revenue. Revenue doesn't matter if you can't turn a profit. But we have not seen a company yet make a good go of this, profitably. Carvana doesn't make a profit. I mean, their net income, look at this. They lost $135 million last year. They lost $171 the year before that. They lost $115 million. This is profit, net income. Look at this. Look at all these negatives of all this money they've lost. So I'm not sure they can make a profit. They might be able to if they were properly run. We don't know. Net income, negative $371 million for Vroom. Negative $203 million in 2020. Look at all this. Nobody's made a profit doing what they're doing. So is it possible? I don't know. But it reminds me of Tesla in that sense. If I'd invested in Tesla back when I wasn't sure if they could make a profit or not, when I wasn't sure it was even possible, I'd be sitting on a gold mine now. But no, I had to wait until it was proved to me they can make a profit. And I'm still gonna make a lot of money on Tesla. In 10 years from now, you're gonna look back and say, dang, that Jimmy McFink knew what he was doing with Tesla. I'm just not one that likes to invest in a company that's losing money, I guess, or an industry that's losing money when it's never been proved that they could or couldn't. But anyway, I'm going to wrap this up. Any of y'all holding on to Carvana or Vroom stock, or are you going to invest in Carvana or Vroom? Or are you like me, you're scared like a little sissy girl, and you don't want to lose your money? What are you doing? What are you going to do? Me? Probably nothing. But I might, just small chance, buy 100 shares of Vroom, but probably not. You have a great day. That's about all. I'm going to Vroom out of here. Oh my God, that was stupid. Bye.